everyone. Thank you so much for investing your time with us today. My name is Seyda Karsi-Tiryaki. I work for Bank of America Securities as an emerging EM sales director, and I head the Turkish equity sales as well. And I've also been a proud member of TÜYID, Turkish Investor Relations Society board for almost 2 years. Today, I'll be moderator for an amazing panel on understanding investors' ESG integration strategies. Up until a few years ago, speaking with investors, ESG mostly meant avoiding the sin stocks, such as alcohol, tobacco, gaming, or nuclear power. And speaking with companies, management teams had never been asked about ESG issues, nor did they have the sufficient data. And today, obviously, is a very different world with a great focus on good environmental practices, strong workplaces, high levels of transparency and incentives with an explosion of data and a big push for disclosure. So our goal today in this panel is whatever your role is in the industry, that you will come away with something, a new idea, a fresh perspective, a differentiated strategy that you can apply through your ESG lens. With that, I would like to send a warm welcome to our panelists today. Mr. Eduardo Gai, the Managing Director and Head of ESG Benchmarking at S&P Global, Ms. Corinne Hearn, Co-founder, Partner and Chief Sustainability Officer at East Capital Asset Management, and Mr. Paul Chen, the President of Malaysian Alliance of Corporate Directors, Global IIRC Ambassador, Adjunct Professor at Sunway University, and Strategic Member of Global Network of Director Institutes. We'll take a moment for each of the panelists to briefly introduce themselves and tell us a little bit about their background in the industry, please. Eduardo, shall we start with you?
Thank you very much, Seda. Thank you for inviting me here. It's my pleasure to be here. My name is Eduardo Gai. I am Managing Director and Head of ESG Benchmarking at S&P Global. I come from what used to be called SAM and then became Robeco SAM. And then on January 2020, we were bought by S&P. Therefore, since 15 months, I'm part of the big family of S&P. Very happy to be here. In the responsibility, we do the corporate sustainability assessment that evaluate the ESG performance of the companies. And me specifically, I manage a team that then provides services to corporates that would like to better understand their sustainability performance. Thank you.
Perfect. And Corinne, please.
Yes, hello, and I'm calling in from Hong Kong, and I'm indeed the founding partner of East Capital. East Capital is an asset management company which we set up in Sweden, Stockholm in 1997, so we've been around for 23 years. And when we started East Capital, we were first investing mainly in Russia and Eastern Europe, including Turkey, so we've been investing in Turkey for more than 2 decades. Then we expanded into China. That's at a time when I moved myself to Shanghai. So I've been in Asia now for 10 years. And now we also have a global footprint investing across all emerging markets with a focus as well on frontier markets. So I'm very excited to be part of this discussion today. I'll be telling you a bit more about the challenges and the opportunities when you're investing with a responsible investing lens on these markets and our approach to these investments. Thank you.
Wonderful. And Mr. Paul Chen?
Thank you very much, Seda, for your invitation to participate in this August body and to share with you my thoughts on the ESG. As a background, I'm a CPA, I'm a chartered accountant, but I serve on several of the public listed companies as well as private boards, as well as NGOs. I'm quite active in the NGO side. Where the ESG component comes into play is that I'm a strong advocate for corporate directors, I myself one of them, that they ought to reorient the thinking towards a broader perspective of their fiduciary responsibilities. Often that we are nailed down, for example, to the financial performance of the company. If you look at any annual report, most of annual report, financial is very, very important, no doubt about that. But we find that increasingly more important now is the intangibles, it's the non-financial issues, which ESG is part of it. Then, of course, you talk about other non-financial issues like intangibles are very, very important. So therefore, my focus is really to drive towards you may say, a paradigm shift in corporate reporting so as to support the investors to have a broader perspective of what they are investing in, what should they look for companies they invest in, and so on and so forth. All right. So hopefully that we can share some ideas on that. Thank you.
Wonderful. Thank you again for being here. I'm going to start off with a question for all of our panelists, please. This must be one of the most debated topics in the world of ESG, the absence of a generally accepted international framework for ESG reporting. In light of new efforts that we hear and we read towards global standardization of ESG guidelines, what do you think are some of the biggest challenges? And do you see major differences between perhaps various regions such as EM versus DM, or in Europe, US, or Latam or Asia? And how do you expect this challenge, this change in the near to medium term, please? Mr. Chen, would you like to start?
I'll try and see what I can answer that. Okay. Yeah, there is proliferation of various, so to say, the alphabet soup of it, or various organizations representing various interests. All right, but the challenge is really to consolidate or put them into sort of one platform, one framework where they address all the issues that is pertinent to the investors before they make informed investment decisions. All right. So here we have got an established standard like the financial accounting standards, all right, the IFRS, International Financial Accounting Standards, the reporting standards from the IFAC, International Federation of Accountants, where all accounting, all accountants institution are part of it. So they have that framework. But at the same time, we realize that financial information is important as it is, but also quite inadequate to really see or really understand the value of the company. And in this, we incorporate issues like intangible assets, human capital. We talk about now ESG issues, climate change issue. Now, all these things are coming into play. Now, how are we going to put everything together? Now, I'm involved with the International Integrated Reporting Council, advocating for an integrated value creation approach to corporate reporting. All right. Now, even as we go into that, we find that there are other questions about whether this report can be given assurance by the auditors. At the moment, the framework is still very sort of not defined yet. Already in Malaysia today, since 2019, all companies must also do sustainability reporting. All right, we follow the GRI standard. But having said that, again, because of the lack of definitive framework, unlike the accounting framework, anybody can report anything so long as it calls sustainable reporting, is still okay. All right. So with that as a background, IIRC, even as we speak, in fact, this month, we are driving towards merging with SASB, Sustainability Accounting Standard Board. SASB, Sustainability Accounting Standard Board, to put a framework around this financial reporting, the corporate reporting. So, while having said all these things, I would say that while may not be immediately all the answers can be given, but definitely an intention, or rather the direction, is moving towards a more comprehensive reporting that covers not only financials, but capture information on the human capital, the intellectual capital, the social capital, the natural capital, and all this under one framework, and having a framework that is that can be audited, all right, they can benchmark against. Hopefully, by moving for that direction, we give the investors a better information, more comprehensive information to make forward decision. Okay, now there are a lot of things I can talk about this, because at the end of the day, when for CPAs, accountants, auditors, we are addressing a market of the information we provide and given assurance to, right? But if you do not understand where the market perception of value of information is, you probably lose them, right? And one of which, as I said, the accounting information annual report, you look at any annual report, it is definitely grossly inadequate. And where do the investment community get information from? They get it from investment analysts, they get it from market network analysts and all these people, and all this information together to make investment decision making are not audited. They're not within the framework of audit. All right. So it's a very challenging situation, and I see tremendous potential for the accounting profession to expand the scope, all right, of what they are doing, but have to look through a different lens, a lens that covers the market demand for the services, right? So that's a perspective from the accounting perspective, and I'm challenging my fraternity. If we don't reinvent ourselves, we may find ourselves sidelined, if not irrelevant, right? So, like in the sense that market is demanding for issue like environmental, social, governance, the ESG issue, and of course, United Nations is pushing for SDG, all right, the social development goal, which you can actually incorporate into it. On the day itself, I will try to create a few slides, so you can see where I'm coming from. Better, okay? That's the thought process.
Perfect. Thank you, Paul. Corinne, shall we move to you? Would you like to add anything on the ESG guidelines and the standardization, please?
Yeah, of course. I'd love to do that. It's a very interesting and a very important question. And Paul gave us a great background about what's going on in terms of all the initiatives to find a way to harmonize these norms. But I will argue that, first of all, I think it's going to take a lot of time. I don't know if you will realize, I mean, everybody now kind of consider that when we look at regular accounting, we have a number of international norms, but these international norms, they didn't come very quickly either. They're my age. So I'm not telling you how old I am, but basically they are my age. And not that
older
old.
than you, but older. It's probably a century old.
It's half a century old. So I'm not 100 years old, thank you. And no, but it's interesting to say that, to realize that, I mean, we just live with this environment and this world where everybody understands and we have more or less the same accounting standards, but it took time to get there. So of course, it's completely normal that related to ESG and sustainability that we do not have today a complete set of harmonized standards. Also because this space is moving all the time. I mean, there's been a lot of focus on climate this year, and going forward, there's going to be much more focus, for instance, on natural capital and biodiversity. So we have, and we will have new priorities coming up. I mean, clearly, some of the regulatory frameworks are evolving so that they will be much more focused on human rights, for instance, and much more focused into the value chain. So it's not only about the topic you are disclosing about, but it's also your exposure to the topics. What I also find interesting where we're seeing things moving, it's not only reporting on the impact you can have on these things, but also the dependence you have from these features. So that's also something which is really, really interesting and important. So why we need more harmonized standards, I think, for two main stakeholders. Number one is actually the companies themselves, because the companies are being requested to disclose all kind of things to all kind of people all the time. I mean, we work quite closely to our portfolio holdings, and we have, I'll tell you a little bit more about our approach to this, but they keep telling us that it's actually really very challenging for them to cope with all these requests. So of course, if there would be much more disclosure harmonization, they will maybe have a little bit less of work. Secondly, it would of course help investors such as ourselves at Is Capital, because we would then have less of issues related to, well, either greenwashing or just complete lack of disclosure on material risk, which is really what matters. But at the same time, I would also like to say, and I understand that this is a bit maybe provocative, but like, you know, disclosure is important, because if you don't disclose, usually you don't manage things the right way. But we should also be careful that we don't end up in a situation where companies are actually spending a lot of money, efforts, resources in disclosure instead of actually doing the work, which is, you know, to contribute to a more sustainable world. And we have like plenty of anecdotes, and we heard stories from some of our holdings telling us, I mean, we've experienced ourselves, you know, you have, so a lot of tick the box exercise is actually quite negative. So you will have situation where you have companies which seem to rate very well in terms of gender diversity because they have, a policy on gender diversity, no matter how many women or what kind of gender diversity they have. Actually, we also hear about companies in some industries where there is really, a specific example of a company in Russia, which is in the steel making business, which improved its score at one of the leading ESG data provider because they adopted and approved by the board a policy on child labor. Well, for anybody that knows just a little bit on Russia, you would realize there is no child labor problem in Russia, and especially, definitely not in the steel making industry, even if there would be. So there isn't. So the company did not need this policy, and the company did not need to do the work, but they did it because they wanted to improve their score. And that's part of, again, that what is being required from companies should be maybe a little bit more thought through. I just wanted to end as well on a couple of comments. Seda, you asked about in terms of geographies, and it's very hard to make some sweeping statements about that. Asia is, yes, it's a continent, but it's got different jurisdictions, different markets where with a regulatory framework in terms of disclosure or standards, which are really different. So we are trying to work on, we are, for instance, joining consultations now in Hong Kong. There's a consultation on in terms of accounting like ESG and sustainability standards. There is one ongoing as well with the CSRC in China, where they're also working into this. So that's really important for investors to take the opportunity to participate in these initiatives. But where the real action is obviously in Europe, with the increasing scope of this legislation or directive called the NFRD, the Non-Financial Regulatory Directive, Reporting Directive, which is now going to be basically covering everybody, including the smaller companies. And it's great. It's necessary when you think about Europe ambition in terms of sustainable finance and climate neutrality, carbon neutrality, and so forth. But it's also, we have to realize it's really it's a massive work for all the issuers, for all the investors, for all the brokers, lawyers, consultants, you name it. So but really, Europe is about to implement a stricter regulatory framework for disclosure. And I think the world is also watching and seeing how this is going to work, because before they might want to jump on the same bandwagon. I'll stop here.
Thank you, Corinne. And Eduardo, would you like to add, please, your thoughts as an expert on this also, especially how do you expect this change to evolve over near to medium term? Thank you.
Thank you very much. First of all, I agree with what Karin said. We need to be patient for reporting financial. It takes hundreds of years to get some kind of standardization, and we still don't have just one standard. In sustainability, we are dealing with this since 3 decades. It still needs a bit of time. It still needs to consolidate even further. And I always like to compare what we do in the field of ESG with what also happening in the field of finance. Do not think that even if tomorrow comes standardization, everybody can report, then all the stakeholders are happy and get all the information that they want. Because like in the financial, for the financial analyst, you will always have somebody that comes and asks you some specific question because it thinks that's important for your company or your industry. Similarly, also in ESG, you will always have some agency or analyst and so on that will come and say, hey, I think this is important for you. What are you doing in this field? And of course, there might be somebody that asks for child labor in the steel industry because it's part of their framework of thinking, and somebody else that might be focused on anything. But this, to say, company need to be ready. In addition to that, in sustainability, we have a lot of things. As Karin said, it's a moving target. The topics that are important in sustainability are evolving. I've been in this field in the last 2 decades. It started, corporate governance was not even important. Now everybody gives it for granted. Climate change, labor rights, and so diversity, and so on and so forth. So you have also to be aware of what's going on in the market, what becomes important for the players, and be ready to then report. Because when the company, the shareholder or ask, you have to be able to provide answer, otherwise you look behind. So it's very important to look at what is out there for the standard, maybe choose for one, and also be aware of what is emerging, because it always takes time to a standard to integrate new topics. I make an example with our way we look at ESG performance. We integrate new topics, and we manage to do that maybe 2, 3, 4 years before they become part of a standard. So it's very important that corporates realize these two facts. In your question, there was also part of what's the difference between the region. We see everywhere in the region they are improving very much. One of the issues that we still notice is that information available in English is still not equal. Certain regions are still a bit lacking behind, but we see otherwise generally very much increase, as well as an increase of financial institutes that integrate sustainability information in their decision-making process. And here we see why it's important for corporates to really report, as I said, to the standard that cover as much as possible, and then look for other option to also see what's going up, what's happening in the future. The EU regulation is definitely also setting a milestone. It came out probably, if I'm allowed to say this as an European, a couple of years in advance, because corporate were not ready to report what the regulation was asking and what the asset manager are expected to report. It's such a detail that it really require a new kind of thinking, also more digital way to transfer their information, not just put in there, but people need to be able to download in a structured way. We're not there yet. Hopefully this will come soon, and we will see if the EU regulation will really make school for also other regions to go into that direction. Then we will see much more detailed information, which on one side is needed because you need to go down to the detail to make the differentiation. In other countries, we have seen stock exchanges on taking an approach to our SASB GRI or other standard, which is already a very good initial step, but I believe this will continue also in the future. Thank you.
Thank you, Eduardo. I mean, thank you very much all, actually. It's an important topic, and I hear from all of your responses that ESG challenges have kind of moved from why to how at this point, and Europe leads, but the rest of the world is following, and they're all moving in the right direction, and we need to be patient. So my next question would be, and I would like to start with Corinne this time, as you were explaining, your background. East Capital is a leading active asset manager, specializing especially in emerging markets and frontier markets for over 20 years. And ESG analysis has been an integral part of your investment process from the very beginning. And I love your company motto saying, no time to rest on the ESG journey. I've seen it, I've read it a few places. So what are some of the key goals in considering ESG factors in investing? Do you use at the moment your own models, third-party data, perhaps ESG scores, or some other best-in-class approach? And what are some of the key challenges, East Capital specific perhaps, and opportunities you face in the emerging markets from an ESG perspective? Are you seeing, for example, lack of data versus some of the other regions and so on? Thank you.
Thank you, Seda. It's also a great question. I'll try to be to the point. So yes, as you said, we've been around now for 23 years, which is actually quite a long time, considering considering the markets where we've been investing. Because when we started at the end of the 90s, we were investing in some markets which just basically been set up. And it's actually a very interesting journey for us as a company, for our investors, but also seeing how the space has evolved in terms of investment universe. And that's why, as I was mentioning, we're also investing in frontier markets. So here in Asia, we're also investing in Vietnam, in Bangladesh, in Sri Lanka, I've been traveling to many places. I always, when I can, go and visit the stock exchange of the place where I'm going. So I visited the Bhutan Stock Exchange, the Mongolian Stock Exchange, the Cambodian Stock Exchange. And it's always been like this conviction that investments on the stock exchange, on the stock market, are a very important component of providing capital for transition company, providing capital for positive change and transformation of the economies where we are investing. So one of the initial, though, aspect of our work, which is still very much so, even though we cannot travel anymore for now since, well, at least more than a year back, is this getting quite close to the companies we're investing into. So we're obviously not a private equity investor, so we don't take any like large stakes in any companies. We don't change the management, but we do have and want to have a dialogue with the companies that we invest into, and it also starts by the fact that we want to know them better than we would if we would just be sitting by our desk watching, looking at the financial accounts on Bloomberg, or just reading some brokers' reports. So we've developed throughout the years something that we call nowadays everyone talks about KYC, know your client. We talk about KYO, know your owner. So that's where it starts for us, the quality of the ownership in the companies we invest into. And that's something that we are surprised to see so little investors and so little, for instance, back to these issues about ESG data providers taking into consideration. Obviously, it's quite subjective because it's about assessing the reputation of people, their ethics, but we think it's really important. And that's where the emerging markets and frontier markets, where you have a less institutionalized ownership than you have, for instance, in the US. That's where really it is important. It does have an impact on the corporate culture, and of course it has a huge impact on the corporate governance. So governance is a very important part of our ESG assessment. It's more than, I mean, it is 75% of when we give an assessment to a company. Some people wonder how come is that much, but our point is saying that if you have a company with a bad corporate governance, you will probably have very bad environmental and social risk management. So, and the other way works as well. So if you have a company with a good corporate governance, you have a good board of directors, with independent directors protecting the rights of the minority shareholders, with good KPIs, which are aligned to both sustainability, but also to the interest of the financial investors, proper capital allocation, knowledge about sustainability and climate change at the board, and so forth and so forth. I could go on forever. This is just super important and would give us the conviction that it's a well-run company. So, but we've always paid a lot of attention to these aspects, and then by maybe like, well, we actually introduced our first like so-called ESG scorecards 5 years ago. And the idea was like, when we looked at what was available on the market, we wanted to document this. We wanted to structure it. We wanted to find a way. I mean, we're in finance, so we wanted to find a way as well to give a number to this assessment. So we created our own framework. And the reason being that looking at what the data providers had, well, first of all, it was very poor coverage on many of the markets we're investing into, because they just don't go in cover these markets. I mean, don't ask them to cover to give an ESG assessment of a company in Serbia or in Bangladesh. I mean, the coverage was quite poor. Secondly, a lot of that's our comment and criticism of a data provider, at least saying that it doesn't fit our needs, is that it's very much tick the box. It's very much based on availability or not of policies instead of real practices. What I mentioned, for instance, about the child labor policy needed in this Russian company, it was not needed. And also, which is something we came to realize, that a lot of the ESG data is backward looking. And if you're an active investor, or you're just an investor, your job is try to, make calls and projections and try to bet that the companies you're investing into the stocks will go well in the future. So doing the work ourselves has forced us think as well, first to have dialogue with the companies, because a lot of information is not available on Bloomberg. It's about us asking the questions we want to get answers to, and forward looking, which is really important. So our approach is not to invest in the companies which are doing best in terms of ESG. It's not a best-in-class approach. We want to be investing into companies that can improve, and we are also working, and that's where I'll come to the most important part for us of our work in terms of ESG, is about promoting ESG in a way that is, of course, beneficiary to our investors in terms of performance. So supporting, so when we do the work by ourselves, we identify the weaknesses, and they will be very different from one company to another, from one country to another, one sector to another. But once we have identified these weaknesses, we start an engagement. The engagement can be bilateral, just us with the company. It could be as well collaborative with other shareholders and other investors, which we think it's increasingly the case, and that's a great thing in terms of responsible investment practices. So we are, of course, in terms of climate, the big issue is the polluters of this world. We're talking about, for instance, oil and gas companies in a place like Russia, where there is very little ambition on a national level. There is no carbon neutrality. Paris Agreement has been ratified, but it's extremely ambitious. So work like what we do as both owner and investor, engaging with companies that really would make a difference. So we are co-lead investors in 3 of these climate action 100+ engagements, and working with these companies to help them, reduce their carbon, their greenhouse gas emissions, and doing it properly. I will end, because I realize I'm speaking too long, but I will end just saying that the big focus now when talking about challenges is that you were saying now we don't talk no longer about like what, we talk about why. We actually no longer speak about why, we speak about how and what for. And that when we are entering this space of sustainable investing, responsible investing, not just doing good ESG investments. And regarding this, we have a lot to do for emerging markets. We have companies which have huge both impact and dependency on a number of these sustainable development goals, and we need to shift capital to support these developments. And at the same time, it's extremely challenging because there is very little information. It's very new for many of these companies to report on this sustainability aspect. So that's something we're really working on to help them together. We're trying to get better information about these specific topics, such as biodiversity, climate change, circularity, responsible consumption, and so on and so on.
Wonderful, Corinne. Thank you. That has been very informative. Before I move to Paul, I have a very quick follow-up question for you, if it makes sense. When you invest in any company, do you see, or when you see share price volatility, reaction to ESG news, ESG ratings, how do you guys deal with that? Is that happening often?
Well, I mean, yes and no, because some of the ESG topics will become, definitely influence the stock price. I mean, especially incidents, controversies. But of course, our work as an active investor is that, well, to be able to anticipate this and see how it works. And in some cases, we just realized that, for instance, the stock price will come down on a reason which is seen by the market as ESG, but we do not consider that the risk is as high or the issue is as big as the market seems to perceive it. And then we will take the opportunity to, for instance, to add to our position. So it can go both ways. But of course, it's part of, we discuss these kind of topics on a daily basis, and we take actions in terms of stock allocation on the basis of these topics.
Very clear. Thank you. And Paul, turning to you, with the growing prominence of fiduciary capitalism, investors want access, obviously, to non-financial information, as we have been discussing, that will help them to reduce risk, improve returns, and make better informed investment decisions. So stock exchanges, capital markets authorities see the value in integrated reporting. So you're the expert on this. Can you please talk us through how integrated reporting and sustainable long-term value creation process can help investors make decisions? Please.
I was saying that integrated reporting is really a very comprehensive concept of reporting framework to the corporate corporate reporting users. All right, we identified as 6 capital integrated reporting. Now, every company have somewhere or other can fall within these 6 capital, but every industry, of course, with a different weightage in terms of the capital that they manage. The whole concept in integrated reporting is that we ought to get through the silo way of thinking, all right? For example, financials, intellectual capital is separately, human capital is separate. Now, from the financial accounting perspective, as I mentioned, that this has been developed over the period of, I would say, a century, because financial accounting has been incorporated in since the first industrial revolution, the second industrial revolution. Now we are in a 4th industrial revolution, and yet we look through the whole accounting standard based on the first and second industrial revolution. Why I say that is because in today's environment, as you realize, much of the asset of the company, the value, or rather much of the value of the company, has been aligned very much to the intangible assets of the company, which covers, of course, issues like intellectual capital, research R&D, which covers area like, of course, ESG and things like that. If you were to ask me, when I first did my chartered accountancy and accounting studies, we are very well trained to identify what are assets and what are liabilities, but we are not good in identifying what is intangible capital. All right, from the financial accounting standard, we cannot include intangibles into our financial statement or the balance sheet, right? But in today's environment, you look at it, as a research company called Ocean Tomo has done the research on this. It's 45 years ago, 84% of the value of the company are on tangible assets, meaning that it's auditable assets. Today's environment, only 10% are tangible assets. 90% of value of the company are intangibles, which for the accountants, for the auditors, we can only verify the tangible assets. Now, that is where the big discrepancy in terms of perception of the investors on the financial statements. And you know, the financial statement is always backward looking, all right? By the time it comes out 3 months later, 4 months later, the annual report is already outdated from the investor perspective, right? So therefore, the reporting framework, you're talking about integrated reporting, is actually more of a forward-looking type of reporting. Yes, financial is still a very, very important foundation or even ingredient in reporting, because at the end of the day, the company got to perform. No matter what we do, if the company doesn't perform to be profitable, it won't survive, all right? So therefore, that is a very important part of the whole reporting framework. But we also know that in today's environment, to have a sustainable growth of a company, to have a sustainability of the company as a business, we need to have a broader perspective of understanding all these issues. Now, ESG is a very generic term. Environment, depending on your company, that's why I said you have to define within the company itself what is of material concern to the company on the issue of environment, same as social issues, same as governance issue, right? Governance issue can be such a broad thing, which corporate boards have fiduciary responsibilities to ensure that they safeguard the interest and value of the company through a good governance framework. So all these issues for a particular company, we have to help them define it. And when it comes to reporting on all these non-financial issues, but I would still say this, as people have been using the term, you know, if you want to know or even to find out where the company is heading, follow the money. So if you were able to capture data from the raw source, all right, yes, financial data, no doubt, still complying with the International Financial Reporting Standard. You can still comply with IFRS. But at the same time, you can further analyze where the allocation of your financial resources gone into. Let me give you an example. Nobody will dispute that we need to invest in human capital, all right? This is the leading edge of a company to be competitive. But where does this reporting framework come into? In financial terms, it's written off as an expense, whether it is employment salaries, or whether it is salary for R&D research people, or whether salary for redevelopment, upskilling, or reinventing the workforce. All these are considered as staff costs, okay? So if you were to do all those things, okay, you are actually disadvantaging the company by not highlighting where this investment has gone into besides administrative costs, okay? Now, I met up with one interesting professor just about 2 years ago, 2019, all right? This professor, he wrote a very interesting book called The End of Accounting, or The End of Accounting. Now, he's not saying that accounting is no good. What he's saying is that we accountants try to, I mean, we are serving the marketplace, who are the directors, and directors serving the stakeholder, the shareholders, and so on. We are providing all this information on the historical basis, one thing, but how often that the investors look into the historical financial information to make forward decision. From this research, statistically, they said it's less than 5% of the time. And most of the time, where do you get information from? From the business analysts, from the market researchers, from all these, from filing with the regulators and so on and so forth for projections. All these things are totally unaudited, and yet they believe in that. To give you an illustration, you know that I'm sure you heard of the what do you call that? The company Grab is similar to Uber. Grab is very, very big in Asia Pacific, all right? They originated from Malaysia, okay? The last time I look at the balance sheet, they make a tremendous loss. They have 370 million Sing dollars capital. They lost about 360 million, right? But today, Grab is priced at 40 billion US dollars, and they're going into the US market, right? Now, the big question for accountants, I'm challenging my peers, my fraternity, is that what has we financial, so-called financial expert professionals don't see that the market see? So where I'm coming from is this: there are many areas that we don't see is because of our, so to say, the first, second, even third industrial revolution lens, I mean, filtering through that lens, that we cannot still recognize intangibles. Today's most valuable assets of what? Really the data, you know that, right? The data. Of course, human capital is one thing, social capital is the other, and of course, other natural capital, which integral reporting capture all this by helping us to understand the capital entrusted to the board. How do we allocate this capital? How will we deploy this capital to the process of the business operation, that we come up with what is the output of this capital, whether we have enhanced it, whether numerically like financials, or otherwise that we have to report it, what area of the non-financial issues that we have invested or allocated our capital into. From there, we understand what are the outcome of the what we have done. So integral reporting is very interesting because it covers a major part of the allocation of capital, which of course, I mean, even for all the investors, you are looking at all this reporting to help you to allocate your investment portfolio, right? So on the financial aspect of it, from the accounting perspective of it, or integral reporting perspective of it, we help investors to understand the capital deployment that is that the board has been entrusted to allocate the capital to the best way and increase or enhance its value as an output and impacting as an output and impacting on the outcome of what you're doing, all right? That impact into the society, all right? Because at the end of the day, all that we are doing, if you look at it carefully, environment is one issue, climate governance is one issue, but at the end of the day, we are selling all these products or services. We are addressing the needs of the society. And therefore, we have to keep very, very close eye on the value that we create in society, the social capital. And give you another example. In Malaysia, you know that we have one of the top global glove manufacturer called Top Glove. Probably you heard of it, all right? Last, I think February, January, they have an AGM. All right, BlackRock is one of the small investors. I think they invest for 1.5, 1.2, 1.4% of the total capital. But they are demanding that the whole board of Top Glove, or rather the whole independent directors of Top Glove, be removed. Why? Because we have failed, from their analysis, they have failed to devote the resources on human capital. They consider that as part of the human right issue. You know why? Because 1/3 of their employees were packed into an accommodation. 1/3 of them attracted or contracted COVID. It's a big issue in Malaysia, and it's a big issue globally too. So BlackRock make a very definitive, literally decision not to vote in the independent directors. But of course, in terms of the global basis, the investment is very small. They were outvoted by the majority of the voters, right? But I can tell you, if Top Glove, as the biggest international investor, were to make an issue out of it, the value of the company would drop if they decided to pull out, you know? So these are the impact of social capital we're talking about, right? It's not just simply give whatever you have and make the best money out of your business. Of course, Top Glove make a lot of money. All right, the value of shares has shot up, but this is the part of important fiduciary responsibility of the corporate boards, right? Now, so these are, to me, is very, very significant ESG issue, governance issue, and social issue. So if we define it from the beginning, what the company is doing, and be able to itemize issues like that are material to the company or the material industry, it may make a lot of sense for the investors to rely on those reports to make forward investments, right? Otherwise, I have this interesting conversation with the author called Professor Baruch Love. It's very interesting when he said that if you had to add back all this financial allocation of expenses for research and development, for human capital development, and so on and so forth, the financial performance of the company will be very, very different. If you follow the accounting standard, it performs very badly. You know what I mean? Because all this issue, human capital, social society issue, environmental issue, all part and parcel of it. Okay. That is the thought.
Thank you, Paul. Very interesting examples from you. I'll turn to Eduardo from integrated reporting to, we're going to gear towards assurance a little bit. Given the ongoing debate on the possibility of having sustainability and integrated reports assured and the appropriateness of existing professional standards for addressing these emerging assurance needs, I'd like to please ask you, why external assurance is very important, and what are the current practices, challenges that you're aware, you're observing, studying, and also if there are any specific areas where you believe external assurance is particularly important. One area that comes to my mind is supply chain. You may, shed a bit more light there, please. Thank you.
Thank you. I think in order to understand this trend, I think we have to a little bit look what is happening in the market. In the last 5 years, we have been seeing, I would say, an exponential increase of integration of ESG information into investment decision. And this is not only with active investor, but also in different asset classes. So we understand that what company report on ESG is used and has a direct influence to then maybe how their credit will look like, if an investor will decide to invest or not. So we see that the importance is increasing. I made always very, maybe too easy comparison, but like I always compare what they're reporting with your tax declaration, right? If you're a student or you earn not that much, also the tax authority they ask you to declare what you earn, and that's it. If you earn a bit more, they expect some proof, some documents. And if you're a company that turns a lot of money, then they also expect external assurance. And I think we're in the same process. 10, 15 years ago, there were still very few players that were taking this ESG information and taking investment decisions. Nowadays, we have sustainable linked loans, we have credit rating that looking at that, we have other kind of interest rate investment decision. One of the latest data is that, for example, sustainable linked loan are about 330 billions, and sustainable linked bonds about 27 billion. These are the latest number I saw. If we look also looking at the green bond and green loans, we arrived to a total of 700 billion. That's the estimate for 2021, which if we aggregate with all what has been given in the last year, we arrived to 2 trillion. So it's a considerable amount of money. Therefore, here is the importance for corporates to have reliable data. They might not be there at the level to be certainly assured, but they have to start having processes to get reliable data, because it's not from one day to the other, and you can provide your CO2 emission. Maybe CO2 emission is still easy, expecting that all around the world, they all report you the same thing. You need to set up the processes, get this information, and then be ready, because soon the pressure will increase and you will ask also to show that it's externally assured. Similarly, for the supply chain, there is expectation that company manage the supply chain and get reliable data from the supply chain. And one way to do that is ask for external assurance, also a bit expensive. So there are different steps to arrive there. Also for us, that we look at the ESG performance of the corporates, we have certain topic where we do not expect to have, sorry, or maybe let's start from the most developed one. There are certain topics where we expect information to be externally assured. For example, for the greenhouse gas emission. Because nowadays, this data is so standardized and so on that can be very well assured and confirmed. There are other data in which we expect company to publicly report on it. Because we say, hey, if you publicly report on your target and so on, you also have a bigger commitment, and we are more sure that you are not really going to just invent the number the evening before you submit it to us. And a step lower, we know there are certain topics where company are not ready to report yet. And for those kind of topics, we are happy to also receive just an internal documents. And we have seen through the years that the bar is going up. Documents that some years ago were only internal, nowadays expect to be external or in a public reporting or in the annual report, which it's also assured. So we are going to see, we are seeing this trend, and this will continue. So really be prepared. Also consider that even if you are not aware, investor, look at your ESG performance. Look at what you report or what you do not report. And if they don't find anything, they model it. Nowadays, the request that we have is for not anymore 10,000 of companies, it's for millions of companies to have data. And how is that possible? Is through modeling at the beginning. And then more and more as companies start reporting, we will consider and verify that. But so there are really big lenses on the company, on their ESG performance, because everybody want to collect this data and take decision also based on that. And I fully agree with also what Karin said. The data that is collected is backward looking. Also, that's also why we also have, for example, in our company, different kind of product that look at ESG performance based on the past performance, even though we try to also include certain criteria that are more forward-looking. And another product, for example, done by my colleague in the rating department, that is called ESG evaluation, where through interviews, they try to understand in which direction the company is going. But that's evidently, it's more difficult to be audited, but it's very, at least in our company, very regulated and checkable. So we see there's a bright spectrum and things are moving. So again, be ready because this will come.
Excellent. Thank you very much, Eduardo. I personally learned quite a lot from all of your answers. As a final round, maybe, I'll just go around, give 1 or 2 minutes each. If there's any final remarks you would like to make, or perhaps to our audience, maybe any one suggestion that you can make to investors or issuers to advance on their ESG strategy, please. Paul, shall we start with you? I think you're on mute.
Yes, I'm on mute. so used to it. From our perspective is that there ought to be very close collaboration between the preparer of information and the investors. In other words, the investor really, the preparer information must really understand what the investing committee is looking for. As we have mentioned several times, that investment is always forward-looking. Financial information is always historical, right? There ought to be a collaboration on this to develop a framework whereby the financial preparers, the preparer of audits and corporate information ought to address very clearly to the end users. I know many people say end users, okay, your regulators are one and all the other stakeholders are very important, but at the end of the day, it is the investment community that look into the reporting that we offer. So that is the kind of services, or rather supposedly our expertise to help the investing community to be able to analyze the company that they're investing in. So there ought to be more collaboration on this area, not just compliance. I know that most people don't do it unless the regulators put a big stick, all right? But on the other hand, I always feel that if we are not proactive or entrepreneurial enough in the way that we think, all right, in allocation of capital, we will lose out in the business, all right? We cannot be competitive globally. So that is there again. So what I'm trying to emphasize the importance of close collaboration between the preparer of corporate information and the investing public, the investing community, right?
Thank you. Corinne, I'll turn to you for any final remarks or suggestions, please.
Yeah, I will bridge over in terms of collaboration. I did mention it already in some of my remarks. I think it is quite extraordinary how much today investors and shareholders reach out to each other and coordinate and cooperate. Last week we had this amazing, climate activism week in terms of the big oil, with the decisions on 3 oil majors, but one of them, Exxon, think that an investor with 0.02% of the shares managed to pull together a remarkable change in terms of the composition of the board of Exxon. And this was done through pooling some other investors. So I think it's really important to mention. And then the last thing I wanted to say, you were, Seda, kind enough to remind of our, no time to rest on the ESG journey. And that's what I want to end with, saying that even if you've not started it, you'd better get started immediately, because it's about a slow and steady winning the race. And it's collaboration, and this is not something that's going to, go over, that you think, well, we have not done too much ESG work now, but let's wait for this ESG momentum or fad to calm down. And no, because this is here to stay. So, and in that sense, I'd like to thank you as well for organizing this interesting conversation, because we all need really to make sure that we never be behind these important trends.
It is a long journey indeed. Eduardo, please.
Yes, let's take the example that Karen used. Who would have thought last year that these changes for this major oil company will come this year? Nobody. You were in the middle of pandemic, climate change, we know is a topic, has been a topic for the last 20 years. And this year, pam, pam, pam. So my point is, be ready. Start working on it, because ESG is moving fast, and you cannot be caught behind. To think, oh, I'm going to do when I have to comply with the law, that's too late. It's not something that you can change from one day to the other one. You have to have been working, you have to be doing your homework in advance. It's like for innovation. You cannot innovate from oh, now we need to innovate, we put out a new product. No, you need to prepare it. And this is the same with ESG. You need to prepare it in order to be ready so that when you are possibly ahead of your competition, but definitely ahead of the legislation, because catching up with this legislation is then very expensive and make you lose ground in the market. Therefore, benchmark yourself, check where you stand, check where your competitors stand, check what their new topics are, and like this, you make sure that your corporate is ready is future-proof. Thank you.
Thank you, Eduardo. Well, all of your sharings have been extremely valuable and interesting that we all learned from, and we are running out of time now. So I would like to thank, first and foremost, TÜYİD for organizing this insightful Sustainable Investment Summit, to the conference sponsors, of course, for their support. This couldn't have been happening without them, and for the audience for listening. But most importantly, when planning an event such as this one, it's imperative to gain the participation of experts in the field. So a huge thank you to all of our panelists for willingness to share your time, your valuable insights in this area. Thank you for being here with us today.
Thank you very much, Seda.
Thank you very much.
Thank you so much.